People make mistakes, but did you know that some mistakes can cost you a decade of negative growth? That's right. During the 2000s, the US economy was struggling, but it doesn't necessarily mean that you couldn't generate profits. During this period, which is referred to as the lost decade, many people broke even or lost their invested money. Obviously, we can't escape extraordinary events or circumstances, but if you want to make profits during hard times and avoid major losses, keep watching.
Hi guys, welcome to Take It Finance. We are value investors that see long-term investing in quality companies as our methodology. There is a lot of information out there, alongside comes even more opinion. And people feels the urge to say something and to express their opinion even when there's no need, and the stock market is no exception. We keep hearing recommendations from analysts, YouTubers, friends and family members to invest in company A or to avoid investing in company B without even explaining the fundamental basis. That's why we have decided to come up with the 10 most frequent mistakes people make in the stock market, plus a little bonus, so you can avoid keeping your money hostage for another potential lost decade. Many investors don't stick to the facts, but get distracted by background noise. Media publications, stock price alerts, and even conversations with family members and friends are not facts. They obviously provide us with information, a lot of information, and probably this information is meant to provoke us to do something. The only source that provides us with facts are the companies themselves. They do so by the earnings statements, the 10Qs that they announce 4 times a year, every year. And moreover, they even publish the annual report, which is the 10K. If the fundamentals of the company don't change dramatically between these announcements, then everything that happens in between are just annoying headwinds. But if the fundamentals of the company change, it should raise some concerns and you should examine the situation very carefully. Yes, I know what you're thinking. You should bear in mind that these reports are not 100% objective. After all, the firm's employees write them, and sometimes they even use sophisticated accounting tricks to manipulate us. And yet, you should know that audit firms are going through these reports. And also, this is the best mean we have in power to know how the business is working. If you want to know the tricks that companies use in their 10Qs, let us know in the comments down below.
You should look at the price in relation to fundamentals and determine your actions based on the valuation of the company, or as some people call it, the intrinsic value of the company. Many investors fail to realize that the stock market is forward-looking. They are not patient enough and sell just because of abrupt decreases in price, even though in some cases the fundamentals of the company are still very good. In these times, you should take advantage of these discrepancies between the price and the true value of the company. And as Warren Buffett likes to say, be fearful when others are greedy and greedy when others are fearful. As long as the story of your investment doesn't change, be persistent with your decisions.
Some investors invest their money in many companies, whereas others believe the fewer, the better. Diversifying your holdings in the stock market is healthy, and many times it helps in creating a well-balanced portfolio. However, you should be careful not to transform your diversification methodology into diversification by overexpanding your portfolio. You should spread your portfolio only to the extent that you can keep tracks. Investing in up to 5 companies can be very convenient in terms of tracking their fundamentals. But if you don't do enough research and it turned out you chose the wrong investments, you could potentially lose a lot of money, and then it is not so different than gambling. For example, let's take Peter Lynch and Charlie Munger. While Peter Lynch managed a portfolio of over 1,000 companies. Yes, you heard right, 1,000. Charlie Munger chose to manage a modest portfolio of only 5 companies. We can agree that both are successful investors with years of experience, and obviously they generated amazing profits. But each of them has chosen the composition of his portfolio according to his character, needs, and ability. If you're just getting started, we think that a portfolio of 15 to 20 stocks is a prudent choice. Start investing in small amounts until you feel confident enough.
Maybe you have read some great books and articles and watched some awesome YouTube channels. and now you think that you know it all. But this is a dangerous feeling because you always must learn new things. We don't claim to know it all. On the contrary, we're always learning new things.
If you have learned something new from this video, please leave a like and subscribe to our channel.
Taking debt or leverage can sometimes be tragic if you don't know how to repay. You should manage your risks carefully and make sure you can pay your loan on time. Be prepared for the worst case scenario and make sure that you will be able to live with it peacefully. If not, you'd better change your mind and stay away from this investment. If you have reflected it and decided to take this loan, you'd better listen to Warren Buffett's rule of thumbs. Take up to 25% debt respective to your total assets. Debt not always is a bad thing. As long as you have a plan, you can generate great profits. Which leads us to the next mistake. Many people invest in the stock market just because their friends, family, or colleagues recommended them. Before investing in the stock market, you should have a solid plan and know your goals. Setting a solid plan is a very important thing, and you need to know how you want to reach your goals and your plans. Remember, every investor has different circumstances in life and different goals. For example, if you just retired, you probably will not take the same risk as a college student. Don't try to compare yourselves to others. Eventually, planning is king and it can make a huge difference.
You can't always generate profits. It doesn't work this way, and life isn't perfect, are some of the common sayings when it comes to setting high expectations from the stock market. You'd better acknowledge that some of your investment won't always be profitable. Every investor should be prepared for a scenario according to which 60% of his investments are successful while 40% are poor. As long as the majority of your investments are profitable in the long run, you're on the right path. Whenever you fail, you should embrace it and learn from your mistakes. Don't just accept the failure, but understand the reasons behind it so you can improve your decision making. Remember that even the greatest investors made mistakes, but they came out of it even more hungry to learn and succeed. Non-supportive environment can sometimes be a financial disaster. It is so important to surround yourself with like-minded people who will understand you and push you forward instead of criticizing you. It's not always easy, especially with family, but you must remember, do not take advice from people who never invested themselves. Usually they talk through their fears and insecurities, and sometimes they pass on some recommendations they have heard or read somewhere. Obviously, their intentions are good, but if you want to improve financially, find those who are skin in the game. If you want to fly with the eagles, don't swim with the ducks.
There is no such thing as one truth. Every coin has a flip side, and things that seem good to others are not necessarily good for you. You should be skeptic before making any decision and do your own due diligence. Including when it comes to our YouTube videos, you should not take anything for granted. Make a double check, see if things make sense to you, and look at them from your own perspective. Only you know yourself the best and know what's best for you. Eventually, you're responsible for your deeds. Be the one to take the credit when an investment is successful, but be also the one to take responsibility when something goes wrong. Besides the numbers and the fundamentals, before making any financial decision, you must make sure that your heart feels that it is the right investment for you. If you sense that something is not fully right with an investment, it might affect your daily life and it doesn't worth it. Some industries are controversial, such as social media, alcohol, tobacco, and defense. Before investing in a company, make sure that its business strategy aligns with your values and beliefs. We probably didn't cover all the mistakes out there, but if one of the mistakes rings familiar to you, please comment down below and we'd love to hear your experience and story.
After talking about these 10 mistakes, we want to give you some golden rules to help you avoid future mistakes. Stop doing demos and start feeling the real deal. It might seem scary at first, but you must jump into the water in order to learn how to swim. You don't have to start with large sums. Every sum counts. Just start investing. Getting rich fast doesn't last long. Most of the lottery winners we hear about don't stay rich forever, since they don't have the right mindset and they are not patient enough. Let the market do its magic.
Don't be too greedy. Over-greediness might bring you to a very deep holes that will be very hard to get out of. Don't buy a stock when it's overvalued or in its fair price, and sell it when it's undervalued. Find the intrinsic value of the company and buy it only in a bargain price. In future videos, we will show you everything you need to know about valuation, so hit the subscribe button down below. In this video, we have covered some of the most important mistakes that we think investors make in the stock market. We hope that you pay attention to them and try to avoid them while investing. Don't forget that even the greatest investors made mistakes on their way to wealth. Let us know what you thought about this video by leaving a like or dislike so we can improve our content and create more great videos for you.